But you know, Don, I ask you this every time you come on. It's an important theme. If things are so bad, why are they so good? If things are so bad, why are these averages up 11%, almost 20%, 52 weeks? 11% year-to-date, almost 20% last 52 weeks. It just doesn't seem like a recession from a stock market viewpoint.
I'll tell you, here's the conspiracy theory that brings it all together and makes it all make perfect sense. Okay, Warren Buffett owns a major stake in the company that controls the Washington Post, a major mainstream media outlet. All you have to do is control the media. All you have to do is spend 2 months spreading stories about how the financial sector is an implosion, how the real estate sector is an implosion, and then when it hits the very bottom, you go in and buy them. So brilliant, bravo, Warren Buffett. Get the Washington Post to talk down Bear Stearns. You go in and buy Bear Stearns. You know, your other guest had it absolutely right. You want to be buying real estate in all the places that the Washington Post says real estate is dead. It's just a typical bear raid, and you just gotta buy them here.
Don, so got to buy him here. I like the bear raid idea. By the way, Buffett did this with Salomon Brothers many years ago. He waited for it to drop,
a past master. We've seen this movie before, Larry.
Well, Mr. 42% Noah Blackstein, would you buy financials in general? It has obviously been a pounded down sector. Would you actually buy them?
You know, I'm not being a value investor. I'm not really a value bottom fisher. I mean, I like the Chicago Mercantile Exchange, and you know, the guys at Goldman Sachs continue to just impress me constantly. I just, you know, how they put up that kind of quarter, given what we went through in the financial markets, all you can do is laugh and own the stock.
Let me tell you the secret about what Goldman Sachs does, okay? The people who went through hell in the last quarter were Goldman Sachs's customers, okay? You want to be Goldman Sachs. You don't want to be Goldman Sachs's customer.
Michael Metzger. Well, Luskin, I know you want to get into it. You heard Wayne Angel talk about once every 50 years the gold thing doesn't work. Michael Metz says it broke down in the early 80s. Don, what's your take on this whole commodity indicator and inflation story?
I just don't get it. So this time it's different. Once every 50 years. You know, why not once every 57 years? You know, this is just technical analysis. We're just making stuff up as we go along. You know, the Fed governor, formerly known as Wayne Angel, talks about housing deflation. Maybe we're talking about housing contraction, but we can't just use the word deflation anytime we personally have a forecast that the price of something is going to go down. So I guess I don't understand what this debate is.
But aren't home prices fall? I mean, Case-Shiller's down 4% year on year.
Okay, well, is that deflation? I thought we were in for a housing correction. Oh. I mean, I know that because of Moore's Law, the price of semiconductors drops 50% every 18 months. Is that deflation? I don't think so. You know, we have to take a sophisticated analysis at this, where look at this, where we see oil at all-time highs, we see gold very near all-time highs, we see the dollar at all-time lows. Hey, look, put it together. There's no exception
here. But there
are
alternative explanations. I mean, you could argue, okay, one is the Fed shocked everybody with a burst of liquidity. They went further than folks thought. Fair enough. Even the tip spreads in the bond market picked up a little bit of that. Not a lot,
and the yield curve. And the yield curve.
Well, I love the upward sloping yield curve, frankly. I think it's a very positive event. But there are other issues. For example, the global boom, buying gold and commodities. Wayne referred to that. And, of course, other people, including myself, have said the Iranian problem, Israel, Syria. You heard Mr. Sarkozy before the UN. Sarkozy's become the Iranian rattler, saber rattler in chief. All those political risks, Don, could be affecting oil, which then moves up with gold. Are those alternative explanations?
Well, why does that make the yield curve steeper? Why does that make the dollar hit all-time lows? You know, you can't just explain this whole world of indicators, all of which agree to with each other on something that happens in Iran. I just simply don't understand the connection.
A major factor that you're overlooking is that 10 years ago, the emerging nations didn't have a nickel. Now the emerging nations and developing nations have literally trillions and trillions in reserves, including the oil exporting nations. What really affects asset prices is where this huge ocean of liquidity goes. At the moment, they've learned owning dollar debt instruments is a bad thing. They're now transferring that money, whether it's to gold, maybe to buy Bear Stearns, maybe to buy oil in Canada and so forth. And this is one of the great movements in the world. I think it's profoundly significant.
But wait a second. That's too glib by half. You can't just say...
Too glib? It happens to be correct.
You can't just
say... We don't just label it as glib. That's not rejoining to the logic of it, really.
Why have they decided it's a bad thing? Because they think the dollar is worth less. What is the definition of inflation except the declining value of the dollar?
Hang on. Don Luskin, I'm sorry, wrap up your point, and then we'll get a response.
If he's going to say that these people have decided they don't want to hold dollars, why have they decided that?
Out of dollars. Because it's been a very bad investment.
Excuse me. I thought this was my chance to make my point.
Mike,
I thought this was my chance to make my point.
Let Don make the point, and then you can respond. Then I want Wayne to come in.
You make the point that these people who've accumulated all this wealth have decided that they don't like the dollar.
They've decided they want to diversify out of it.
Okay, I give up. This was supposed to be my time to talk. Mike, you just go ahead and finish out the whole show.
All right, Don, finish it off. They're diversifying out of the dollar, and it tells you what?
When you get out of something, that means you're forecasting that its future value to you is going down, and that is the definition of inflation. When the currency goes down, that is the definition of inflation. That's what this global electorate is voting on when they send the dollar to all-time lows. That is an inflation indicator. It is not an excuse that allows you to do away with inflation.
All right.
I think we're in the worldwide lowering of interest rates, and I think there's a flight from currencies into other stores of value, and it will be oil, and it'll also be in the big cap growth stocks.
Wayne Angel,
We call that
Alan
inflation, by the
Greenspan's
way.
book,